everyone, this is a trader investor. Today I want to talk about something a little bit out of my ordinary, meaning I usually talk about price action to dictate my entry and my exit. But I've had a lot of questions regarding indicators, regarding moving averages and VWAP. So I want to address those and give you let's say an extra tool set for your arsenal so that you can take advantage of it. Just keep in mind what I'm about to share with you is something that I have done in the past that I don't usually do. I like to just look at the price action and let the price action dictate my entries and my exits. What I'm going to show you is how you can use indicators to find similar entries to mine without using the indicators. But if you're one of those people who likes to use indicators, here is what I'm going to show you around that. So let's focus mainly on the spiders, the SPY. And the indicators that I am going to discuss is the 34-day moving average, the EMA, right? Exponential moving average, 34-day, 34 period, depending on the time frame, right? If you're looking at the day chart, it's a day 34 days. If you're looking at the hourly chart, it's 34 hours. So I start with the 34 EMA, and then the other thing I add is the VWAP. The VWAP is just a daily VWAP. It's not an anchored VWAP. It's not a long-term VWAP. It's just every single day's VWAP. So these are the only two indicators that you need here. The VWAP and the 34 EMA on the close. That's the white line is the EMA, and the dotted yellow lines is the VWAP. So how do I find entries and exits based on this? And you can do this on any time frame. I just find it always easier on the hourly time frame to kind of look at this, because it gives me sometimes a little bit of an earlier entry, but you can use this on the daily time frame as well. And the goal here is not in and out same day, it's in one day out after a certain target is hit. I have a target threshold which I will also discuss, but mainly on the hourly chart. For me, I love the hourly chart because all I have to do is spend 2 minutes at the top of every hour to see what the market is doing, and then come back at the next hour. Very, very easy way of trading. So now that we have the indicators in place, what sets up for an entry, for an exit, and a reversal? All of that is in play. So another indicator that I always add is an oscillator. This one is my own oscillator, but you can put a MACD, a stochastic, an RSI. You can play around with the settings. But the main reason why I want the stochastic is to tell me, is there a divergence between price action and that oscillator? That's the one thing that I want to look at. So in this instance, as price is making higher high, my oscillator is making lower high. This is important to me because this is the basis of the entry that I'm going to discuss today. This is what kicks it off. If you don't see this divergence, there is no entry, even when some other conditions are met. And I'll show you real quick now why that is important. So for entry, what we want to know is the current trend exhausted? Right? Has it run its course, and does the market want to pull back? We don't tell the future, we just see what the charts are telling us. So as we see exhaustion, as price is struggling to rapidly increase, then your oscillator will start to decrease, showing you a slowing down of momentum. That's all we care about. So when that momentum is decreased, that's when we know, okay, now my ears are perked, I'm ready to start thinking about an entry. So what constitutes an entry? We enter long when the VWAP is above the 34 EMA. We enter short when the VWAP is below the 34 EMA. These two things are very, very important. Now, as I mentioned, if you look at this move here, right, this move here, there is no convergence, it's in alignment. If you look at this move here, lower high, this is in alignment, lower high. So now, because I see price VWAP below the 34, is there an entry? And the answer is no. No entry for me here, because I don't see a convergence here. I don't see a divergence, right? They're all talking the same thing. I don't see a divergence. So there is no entry here. There are other methods you can use to find an earlier entry. If you specifically use price action, as you see high, low, lower high, lower low, even lower high again, you can enter at the break of the last swing low, 465 to 462. This is what I talk about price action. But if you're using the indicators, by the time the VWAP is below the 34 EMA in this instance, because I don't see an exhaustion, right? The oscillator is not telling me the momentum is slowing down, I don't enter, right? So you could technically enter and say, hey, but this was a winning trade, 464.90 to 462.50 is a winning trade. Absolutely right, it's a winning trade. But for me, that's not an entry. I do not enter because I don't see a divergence here. I don't see a potential of momentum loss. And so if we go back in time, you'll be able to see some good examples of that. You'll see some good examples of that when let's do this. Let's go back here. So here, hold on, let me zoom out a little bit so you can see clearly. So in here, this area is just an end, right? An end to this down move. Price has reversed. So we'll come back to this in just a moment. But let's talk about this area here. When we look at that area, that's a critical area to look at. When we look at that area, and now we focus on divergence. Is there a divergence? Price is making higher high. Price is making a higher high. But my oscillator is making a lower high. My oscillator is making a lower high. Boom. This is setup number one. I'm ready to go. What is the next thing I want to look at? The next thing I want to look at is I want to see VWAP below the 34 EMA. Is that condition met? Yes. VWAP below the 34 EMA, that condition is met. So what is the next thing? Well, there's two ways that I can enter this position. One is VWAP below 34 EMA, and as soon as I have a bar close, a 1 hour bar, because we're looking at the hourly chart, a 1 hour bar close below that 34 EMA, I can take the low of that bar, and as soon price breaks the low of that bar, I enter. Boom. And here you have an entry right here. You have an entry right here. So that's one way to look at it. The other way to look at it is a full bar below the 34 EMA and at the low of the swing. In this instance, it happens to be the same entry point, but you can also wait and see. I need to see a full bar below the 34 EMA before I enter. A third possibility, riskier but better reward, riskier but better reward, is to wait for a rally. What do I mean by that? Well, we said here's our entry, right? Price closed below 34, VWAP is below 34, and there was a small rally before our entry bar. So when it rallies and it terminates not making a new high, then as you know, below those two bars that made the high, the lower high, I can enter there, right? In this case, right around the VWAP. This is a riskier entry because this could mean that this was just a fake reversal and price is going to continue its upward movement, even though the oscillator showed divergence. That's okay. Sometimes those things happen, so you have to accept that. So riskier entry is at, you know, when you see this lower high, and as soon as the low of the bar that has made the high is broken, I can enter. In this particular case, it has worked because price continued to move down. So this is our entry. On the opposite side, when we look for divergence, what we are looking for is the divergence on the low side. As price makes a lower low, is the oscillator making a higher low, right? In this instance, they're moving in the same direction. They're moving in tandem. So there is no entry in that particular instance. There is no entry there. However, when we move a little bit further, right? And, you know, just think about this. When VWAP is above 34 is when we enter long. If we said, hey, there's no divergence here, and we still get, you know, trigger happy and enter this position, we're stopped out, you know, after 3 days, because we are not going to get to our target. Because number one, this gap up is so high that price is not moving any further up. And number two, the number one condition for me is not met. So then, as you can see, because that is not met, price continued to collapse. Now here's an entry for us because price makes lower low, but the oscillator makes higher low. Here's condition one that is met. As soon as this condition is met and VWAP is above 34, price is above 34, I can enter. Depending on where you place your stop, this is going to be between a winning trade and a losing trade. If you put your stop below this bar that crossed the 34, in this instance you'll get stopped out. If you put your stop below the recent swing low, that's a more conservative stop, more conservative entry. You just get less number of shares, less number of contracts. It doesn't mean you increase your risk. And you know, we can talk about the risk in another video. So this is our entry, and our entry actually gave us a good position for our exit. And so for our exit, now that you have seen how to enter this on both sides, what is my exit strategy? I just use the Fibonacci retracement. I take the recent swing high to recent swing low, and I exit at 100% is target 1. 1.272% extension is target number 2. 1.445% extension is target number 3. And then if you have any remaining position is the 1.618% retracement. Those are my targets. 100 is 1, 1272 is 2, 1445 is 3, 1618 is 4. Those are my targets. And my stop doesn't move until I hit target 1. When I hit target 1, my stop moves to entry. And then every target that I move, my stop moves to the previous target. Because I don't want to give back gains, so I just keep moving my stops. And as you can see in this entry, we entered, it pulled back, it started to rally again, it pulled back again, but we never went to our stop, and then boom, we hit target 1, we hit target 2, right? Very critical to think about your target. Absolutely critical to think about your target. And target 3 also hit in this instance. We came close to target 4, so I meant target 4. So target 1, target 2, target 3, target 4. Came close to it, or if you really want to wait the next day, we went past it. So that's how you exit. And another way to also consider exiting is if you get the opposite signal. If you get a divergence, price makes higher high, but oscillator makes lower high. In this instance, we see this, but we see this. This is a dying momentum. If we see this and we see the VWAP below the 34, time to exit. You don't have to wait until targets are hit. Of course, you can wait and see what happens, but for me, my preference is I wait for another entry to get the trigger. So there you have it. Very simple strategy. And if you think about these entries, they really line up with price action. They line up with price action. And what do I mean by that? I'll just show you just one example real quick here before I wrap up this video. So price has been coming down. Our oscillator tells us it's time to enter. We have a low, a high, a lower low, a high, a higher low. Now that we have a higher low, I can enter, right? So the entry is about the same. It's a day later, but it's about the same. Or you get the same result by waiting an extra day, right? Same result. Because I draw a trend line, I break that trend line, I can enter, and then my exit doesn't change. Price action, my Fibonacci tells me my exit. My exit doesn't change. My entry is slightly different. Sometimes it's a little bit sooner, sometimes it's a little later, but overall it's about the same. So that's why I wanted to do this video, to show you if you're struggling with price action, you can add a couple of indicators to kind of guide you, not to decide for you, to guide you. And you take a long position when VWAP is above 34 EMA, you take a short position when VWAP is below 34 EMA. For entry trigger, you want to see in your oscillator an opposite direction. Price making lower low, oscillator making higher low, or price making higher high, oscillator making lower high. So if you combine this, you have your simplified entry. So I just want